Welcome to the December 8th, 2025 advance report for McGowanGroup clients. What a week it was. The Santa Claus rally has arrived. Merry Christmas. And part of this rally was set off by three factors that I'm going to cover. Obviously, you've got AI mania. Google comes out with its next generation Gemini, which, by the way, if you haven't used it, you've already got the browser open likely. Go ahead and try the AI mode. And what you'll find is that Google likely leapfrogged their competitors, OpenAI. They won't make money on ChatGPT, they said, till 2030. Anthropic not making money till 2027. Google actually makes money, last time I checked, and they're spending less than they're making on the enhancements. Well, that set off a rally when it was released. You could see it right here. And Google's part of driving the overall markets into record territory during this Santa Claus rally. All right, so the Dow up 15% total return for the year if you add the dividends in. And you can see a little Santa Claus rally right here, dancing pretty close to its all-time high. What happened? Well, this week, there were two primary factors besides AI mania, and everybody's excited about that. And it's helping the overall equity markets. The first factor was actually bad news for the month of November. ADP does they do more payrolls than anybody else in the country, and they have the best data. They came out and said 32,000 net jobs lost in the month of November. That set the stage this week ahead. The Federal Reserve meets, and the T-bills moved to the same rate they would be if the Fed cut by a quarter. T-bills don't move, Treasury bills. That's real money. They don't move ahead of the Fed unless they've already determined that they're going to cut, or at least they believe that. The jobs report, bad news, but it was good news for the markets because you'll get the Fed rate cut. Inflation came for September. They're 3 months behind on this stuff, but they'll eventually catch up. Anyway, 2.8% inflation. The Fed target right now is 3.875. That could be 4 more cuts coming in 2026 as part of that forecast. Something else happened. This is totally outside of AI mania. Sorry that we're going to change gears for a second, but I want to talk about real assets, and then I got a warning coming up. So don't miss the warning. I'll give you a big to not to here as we go forward in the video. Now, 74% over the past year, natural gas just caught fire. You can see it right here, actually hit $5.40 per million BTUs. What's happening? Well, here from Dallas, on this side, out in West Texas, I've got that giant sucking sound of the data centers, right? Because nuclear takes too long. What do? They actually have trucks where you can hook them up to the pipe. Pipe is a key thing. You need a pipeline to do natural gas. You can't play natural gas by sticking it in your garage. That's very dangerous. Now, liquid natural gas. The other side, that giant sucking sound, liquid natural gas exports up about 50% according to Recurrent in our most recent broadcast at networthradio.com. Wow. How do you take advantage of energy infrastructure that supports the fact that natural gas, and due to the Arctic chill that's coming, well, here is something that we've had in the portfolios. It's not a recommendation for your portfolio till you come down and get a plan. Just because we talk about it doesn't mean that it's a recommendation. You need a written plan from us, and you can go to networthradio.com and update your plan for 2026. We love to do wealth management planning for clients, including coordinating with your tax advisor, your estate planner. Anyway, this is one of the components. Last 5 years, 25% average annual return over 5 years. That's really good. I will say it was down by 2/3 when the economy shut down in 2020. Wow. What led to a choice like that and to add to it when it was low? Well, part of it is they own real assets like a tollway that pump the oil and gas. You get paid every day. You get a commodity override, and this energy infrastructure is irreplaceable. That's one of the key components that we've been working on. How do you take advantage of this? That's a real asset. Now we move into a warning we gave you. This is why you want to subscribe. Whoa, what's that? That's Bitcoin. Went all the way to 126,000 a coin. Then it goes to near 80,000. Tried to spike over 90, but it's back down to about 88,000 at the moment. Well, what happened in this run-up? If you want to understand this, you need to understand that. So that's minus 9% the past year. Remember, crypto is the future, global transactions, everything, blockchain. Okay, I get it. However, there's a problem here, and that problem is leverage. So we're going to start with where the money came from to do this and what the net result is right now. Whoa, this is MicroStrategy. It's down 65%. To illustrate the insanity, they set themselves up as a Bitcoin strategy company. Michael Saylor said, oh, we're going to borrow money and we're going to sell more stock and we're going to buy Bitcoin. Okay, so you're borrowing money, you're selling more shares on top of your current shareholders, and you stick it in Bitcoin, and when Bitcoin goes down, then you're kind of leveraging that downside because you still have to pay back the debt and make interest payments, right? Minus 65% from its peak back over here in November. This run-up, and if we look at the big run-up, it started in May, and even MicroStrategy got back to a record high at the time, or almost a record high at the time. Well, there was a lot of leverage coming in. So these are the exchange-traded funds based upon MicroStrategy. So if MicroStrategy is so fabulous, you could get 2x, 3x times what MicroStrategy was going to move, supposedly, all right? So you buy the ETF and you get the turbo MicroStrategy, which is all based on Bitcoin. How did that work out? Whoa, look at this. Total return, this is over from inception, minus 96%. Inception was in May. Well, imagine buying something and, here we are 7 months later, you're down 96%. That was probably not a good idea because it involved derivatives, leverage, and overinflated cryptocurrency. The timing couldn't have been worse. This is a good example of what you don't want to do in a portfolio. This is not done yet. There's a lot more leverage in the crypto markets, and it's going to be an exciting story for 2026. So be sure to subscribe. I'm Spencer McGowan, your financial weatherman, and we look forward to serving you in the year ahead. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.